Hello traders, this is Fawad Razak, the market analyst for City Index. Today is the 9th of April. So the markets remain under pressure because of ongoing trade war. So the latest news is that China has retaliated and they are charging 84% tariffs on goods coming to China after the US raised Chinese imports tariffs to 104% the day before. Now the markets have come back off their earlier lows after Trump said be cool and everything will be okay and that it's a great time to buy, but whether or not the markets will listen to him is another matter altogether. Now looking at the charts, then the S&P 500 is testing a major support area around this shaded region here. If I zoom out, you can see that there's a trend line going through the major lows over the years since markets bottomed in March of 2020. And we have seen the markets bounce off this area because of that. But should we get a decisive close below this area, then that could potentially pave the way for more selling pressure in the days ahead. But let's see if the markets can bottom out here, or at least provide a tradable bounce heading deeper into the week. Now, in terms of other levels to watch, the shaded blue region is where the market had previously peaked in early 2022 and again in 2023 before breaking out in early 2024. So that area was previously a major resistance zone for the market. It's now being tested as potential support, and we've seen a bounce from here in the last few days. Now the key question is, does the market want to hold above this area of support, or do we go below it? A decisive break below the support zone could potentially pave the way for a drop to the 78.6% Fibonacci retracement level against the rally that started in October of 2023 and ended in February of this year. On the upside, the first level of resistance or area of resistance comes in this shaded region, where previously the index had found support on a number of occasions. And most importantly, in August of last year at 5,090, this low right here, is where the market had found significant support previously, and we have broken that level. So the area marking these lows is now our first area of resistance that we need to watch closely. Now, if you can get a daily close above this area, I think that would be the first bullish signal to watch out for. And if that happens, then that could pave the way for a decent bounce. But a lot will now depend on the outcome of those trade talks between the US and its major trading partners. And depending on that, we could see the next big move in the markets. Now, all the uncertainty is helping to fuel a fresh rally in gold prices. The safe haven precious metal has bounced back after staying momentarily below the 3,000 level earlier this week, but the stay below that level didn't last long, and now it has bounced right back up to break back above the 21-day exponential moving average and a few resistance levels. So where do we go from here? Well, if the breakout can hold, the key level of support now to watch is at 3,022, marking the high from the previous day, where we also have the 21-day exponential moving average coming into play. For as long as the precious metal now holds above that level and thus maintain this bullish trend line, the short-term path of least resistance will be to the upside. However, if we go back below that 3,000 mark once more, I think that would be a bearish scenario for gold. And in that case, we could then see follow-up technical selling towards 2,790, the area shaded in light blue, and where the long-term trend line comes into play as well. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.